Welcome back to Alpha Recap. Morgan here. Today we're breaking down a mixed session after the close, with rotation out of high valuation tech and into cyclicals. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, great to be here. The tape was pretty clearly headline driven. Not a smooth up or down day, but a lot of sector dispersion.
Let's start with the big picture numbers. The S&P closed down about 0.6%. The Nasdaq 100 finished down about 1.1%, and the Russell 2000 small cap index slipped about 0.8%.
Right, so what really stands out here is that tech and communications led the weakness, while industrials, materials, and parts of energy held up. It was a rotation day.
Walk me through what triggered that rotation. Was this macro or more pocket headlines?
Mostly pocket headlines and company-specific stuff. Streaming and media names sold off, and that put pressure on the Nasdaq 100, which is more concentrated in mega-cap growth. At the same time, there were reports of large industrial investments and project wins that lifted industrials and materials.
So not a broad risk-off, more of a repositioning?
Exactly. Investors seem to be taking profits in stretched growth names and redeploying into cyclical areas that are more tied to near-term activity and policy demand.
You mentioned streaming. Netflix was called out in a lot of wrap-ups today.
Yeah, that tracks. Netflix took a notable hit, and that weakness bled into the wider communications group. That helped explain why communications underperformed and why the Nasdaq 100 lagged the S&P.
And the sectors that outperformed were industrials, materials, and selective energy names?
Correct. Industrials looked solid on headlines about big-ticket investments and contract wins, things that favor equipment makers, defense suppliers, and specialized manufacturers. Materials and miners were helped by renewed focus on rare earth supply and some project wins. Energy had selective strength on policy-related news and deal activity. Small caps underperformed, which told me retail and regional flows were cautious. Some regulatory scrutiny in financial names and uncertainty about funding likely dented appetite there.
There was also a space-related headline today that had ripple effects, right?
Yes, a postponed high-profile launch touched off a pullback across space and launch stocks. It's a reminder that operational execution risk can move entire thematic baskets in a single day.
That felt like a pure headline-driven move.
Totally. And beyond that, cannabis saw renewed chatter. Policy momentum and M&A talk lifted some sector-focused ETFs and issuers intraday.
Let's drill into the mechanics for a second. Options and positioning. Did the derivatives flow confirm the narrative?
Yes, put volumes were elevated in large cap growth names, while there was constructive call interest in select industrials and energy names. That's typical of a market hedging away from long-duration growth and routing capital into earnings-anchored cyclical exposures.
You said long-duration growth. Can you explain that simply for listeners?
Sure. Long-duration growth refers to companies where a lot of value is tied to profits expected far in the future. When rates or Fed uncertainty are high, investors prefer earnings that are visible now rather than promises many years out. So those far-off, growth-dependent valuations get hit harder.
Got it. Want to run through a few notable names that popped up in notes today?
Absolutely. CarMax was mentioned. It's been on a multi-session run, up roughly 9% since its recent earnings. Traders pointed to improving inventory turns and margin commentary. Bloom Energy was another name with positive analyst write-ups tied to product wins and contract momentum. Avery Dennison had a mixed reaction after first quarter results. Folks are debating durable demand versus margin pressure.
And on the weaker side, Netflix, plus that space cohort you mentioned?
Yes, Netflix was a visible faller and it dragged the media group down. The space launch postponement knocked down several space-related stocks and highlighted how sensitive thematic baskets are to execution news.
Short reaction? Interesting.
Honestly, I was a bit surprised by the speed at which money rotated out of mega-cap growth into cyclicals today.
Right. And the other thing is,
analysts were quick to point out that if growth indicators, think industrial output or durable goods, start to show more life, traders will prefer cyclical exposures rather than long-duration tech. It's a two-track market right now.
Let's talk macro context. There weren't any earth-shattering economic prints today, but the Fed remains central to positioning, correct?
Correct. The market is still parsing whether inflation is conclusively moving toward the Fed's comfort zone. Until labour and price signals move decisively, participants are staying sensitive to rate risk, hence the shorter duration bias and hedging in options markets.
So the bottom line is, headlines can create big sector moves, and without clear macro relief, that could persist.
Yes, trading will likely stay selective. Analysts note that stock pickers who can separate macro-sensitive cyclicals with concrete revenue or backlog from long-duration growth stories will have an edge in this environment.
Quick reactions. Right. Okay.
A couple of technical points worth flagging. The Nasdaq failed to keep up with the S&P today, and historically similar rotations have preceded multi-week consolidation phases while participants reassess macro and earnings news. So watch whether the Nasdaq can reclaim recent highs. Failure could deepen the growth sell-off.
And what should listeners watch tomorrow and into the next session?
3 things. 1. Earnings and company-specific catalysts. Guidance and margin commentary from cyclicals will be key. 2. Any Fed speak or fresh inflation and labour data. Surprises will shift positioning quickly. And 3. Geopolitical or operational headlines. Space, energy policy, and regulatory moves in banking or cannabis can spark outsized moves.
Any quick trade-offs for different investor types? Not recommendations, just how the landscape looks.
Analysts suggest that for those focused on shorter duration outcomes, cyclicals with clear revenue drivers look more attractive in this tape. For those who favour growth, the message was that valuations remain vulnerable to rate headlines, so patience and selectivity matter. Again, this is analysis, not personalised advice.
Final quick hits. Anything else to call out from today's session?
Options flows, rare earth conversations in materials, and the space launch delay were the 3 micro themes that really moved things. Also, cannabis policy chatter continued to create idiosyncratic winners.
Key takeaways for listeners. 1. The market closed mixed with clear sector rotation away from some high valuation growth names. 2. Industrials, materials, and select energy themes showed resilience. And 3. Fed messaging and company-specific catalysts will keep volatility elevated.
Exactly. Analysts note the volatility is likely to remain until macro signals about inflation and labour become clearer. Be selective and focus on fundamentals and execution.
Quick reminder, our discussion today was for informational purposes only. We did not recommend buying, selling, or holding any security, and we did not provide personalized investment advice.
Right. This is market colour and analysis. If you need tailored guidance, consult a licensed professional.
Thanks for joining today. If you have questions about anything we covered, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's it for Alpha Recap. See you next time.